Hey guys, Steve here with the Anatomy of a Stock Trade for Thursday, August 21st, 2014. I just want to go over a trade that we made in the strategy sessions for the model portfolio, and I want to go over one huge mistake that I made when taking or exiting the trade that, looking back, it's always good to learn from your losers just as much as your winners. So this is going to be more of an educational video than anything else. But, basically this was the setup I was looking at, that we had this nice consolidation on the weekly chart. Okay, stock was moving sideways. We had trend line coming higher. And we started to get some breakouts over weekly consolidation. On the daily chart, we had the same thing. Here was daily trend line that I was looking at, higher low. And eventually, we had some pushes above this consolidation. I was really waiting for an opportunity that it would close higher than this 76.63, because we had topped here back in March and then same top right here in July. So I want to make sure that this was a valid breakout. So sure enough, we started looking at it and we had our breakout level. Okay, here was the level. We had the move above it. So the next step was to enter the next day at the open. Next day at the open was 75.79. So we got a great fill. Stock was lower. We got a really good fill. And at this point, again, we were identifying this trend line here with these two lows. And again, the more points along a trend line, the more valid I would call it. So I wasn't 100% satisfied with this trend line, but we were going to run with it. We had stock move. It tried to break out. Okay, and then it started bouncing around. So we drew another consolidation box right here. Okay, so basically from 77.30 down to 75. So again, the stock was trying to move around, had earnings, finally broke out. Okay, broke out, but closed down in the lower half of the range. So, it was a breakout, but nonetheless, it was, not as strong as I'd like to see it. But in the same respect, the market was also not acting well at this time. So it was, the breakout was good. And what we did is on that breakout, I raised our stop to this level, this 75.20 level. Okay, so as you'll see, came down, we tested 75.20, bounced off it. So now I said, okay, well, that's definitely a good level to be on. All right, so it bounced here and it bounced here. Now the 50-day moving average is coinciding. So now if we broke this level, 75, say 75, we would be breaking this previous low, this low, trend line support, and 50-day moving average support. So I felt very confident that the trend was intact, but I was concerned with, what could be a potential new downtrend. So we moved sideways, and then finally we had the breakdown. Okay, so followed my plan. I exited, all right, and didn't second guess it. Exited the plan or the trade, and then look what happened. Boom, 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 right up to new highs. Okay, so we exited right here next morning at the open, 75, and now it touched $80 last week. So the glaring mistake that I made, that you're all wondering, and it's harder to see when it's zoomed in so much. Trend is important. Trend line selection is important, and time frame is important. Here's the weekly chart. You had this low, this low, this low, this low, and sure enough, the low from my exit was right there on that trend line. And I even said something when I exited that, I wouldn't be surprised if this was higher when, in a couple weeks after our exit. What I didn't look at was I was so fixated on this trend line. Okay, I was so fixated on how the market was reacting that I completely overlooked this trend line right here. Oh, not that trend line. This trend line right there. Okay, low, another low, another low, another low, and sure enough, my exit was right at support. Okay, never even looked at it. The reason was I wanted to raise stops because of how the market was reacting. I was trying to raise stops where possible. Okay, I was so fixated on this trend line with these 2 points and then potentially a third point than I was on the longer term trend. So that's just a lesson. If you're in a stock, if this was something that you were in short term, then fine. Yes, absolutely, you should have taken your exit. Okay, but if this was a stock that I usually like to be 3 to 6 months out, down the line, this was a trend line that I should have seen, I should have recognized, and I should have used more than this trend line here. This trend line was way too aggressive for me, for my time frame. What am I trying to do? That should have been the trend I used. And if that was the trend I used, I would have never raised my stop to 75. My stop would have either been still down here at 72.45, or potentially, if I really wanted to raise my stop, it would have been at this small little consolidation at 74. With that said, it's just something, it is what it is. It happened. You can't beat yourself up about it. You followed your plan. So the fact was, we followed our plan. That was the exit. And that was, we did what we were supposed to do. So chalk went up to following our plan and being disciplined. The problem was, from the beginning, the plan was a little bit flawed in that I didn't recognize the proper trend lines to go off of. So, again, just a little bit of a mistake on my part. Unfortunately, got stopped out right at resistance, right at support, only to watch the stock rally back in our face a full, 5 points, and a couple. What is that? I think we took a small loss in the trade. The fact is, if I had left the stop here at 72.45, it wouldn't have been a huge loss. It would have, I think, been like a 0.8 R. I think we got out at like a 0.3 R or 0.25 R. But right now we'd be profitable. And that's the whole idea of letting your winners run. Don't micromanage them. And that's exactly what I did. I let the market get in my head. I micromanaged the trade instead of just letting my risk take its course. And I identified the risk in the beginning, and I tried to micromanage it and keep it as tight as possible. So that little blip below this support level came right into trendline support, which I didn't have, and that's where we exited. So again, it's always good to learn from your losers. They usually provide better guidance going forward than your winners do. But with that said, it is what it is, and it's unfortunate, but it's going to happen. So the fact is, we followed our plan, and that's the only positive I can take out of that one. So, guys, if you haven't already, please follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel to get all the future updates. You could also subscribe on the blog to the free nightly recap, where I send out the links to the educational video in the morning and the strategy session at night directly to your inbox, so you don't have to go to the website or anything like that. It's already delivered for you. And any questions or comments, please leave them in the comment section below and hit that like button. Have a great rest of the day, guys. We'll see you tonight for the strategy session.